Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a very strong monthly demand and support area. From here, in fact, all these previous rejections to the upside have been created, and every time the market created quite significant rejections to the upside. And what we can see at the moment is that the market is testing and starting to reject the exact same zone. So there is definitely the possibility to see some bullish price action being created away from this level, as already happened in the past, every time that the market tested this exact same zone. So from a monthly standpoint, everything seems quite bullish, and we could expect some bullish continuation to be created away from this area. Now, let's keep that in mind, and let's drop down on lower time frames. Now, if we go here on the weekly time frame, we can see how the situation is quite clear. In fact, this level is the important structure that we have to identify. This zone was already acting as previous resistance here, then the market broke it to the upside, and what we know is that previous resistance, once it is broken to the upside, becomes support. The market, in fact, tested the level as support here, rejected it to the upside, again here, tested and rejected, and then the market broke below the zone and then broke back above, confirming this move to the downside to actually be a fake breakout. Now, when you have a horizontal level of structure, which gets actually respected multiple times, and then the market breaks below it and breaks back above, therefore confirming that the push to the downside was actually a fake breakout, at that point, what you would naturally expect the market to do is to go for another test of the zone and then to reject to the upside aggressively. Now, you might be asking yourself, why does the market often create these fake breakouts? Now, these are perfect opportunities for manipulations because when the market breaks a support level, most retail traders will start shorting, right? And also the people that already have bought the support when the market breaks below actually get stopped out. And a stop loss order is simply a sell order if you were buying because it takes you out of the position. So the amount of selling pressure that comes both from the stop losses getting triggered and new sellers coming into the market since they see that the since they see that the support has been broken to the downside, all this selling pressure combined gives the possibility for institutions to actually start buying. Because you always have to remember that if they want to buy, for every buyer there needs to be a seller in the market. And if there aren't enough sellers, they can artificially create sellers by creating a fake breakout. And this happens both to the downside and to the upside. You probably noticed fake breakouts yourself already in the market. It is quite common. So in a situation like this, there is a possibility to see a test of this level and then a potential rejection to the upside away from this zone. Now, let's drop down on the daily time frame and see what we have. Now, from a daily perspective, the situation is quite clear. We can notice a strong impulse to the upside followed by this correction. I also made a full breakdown of EURUSD just a few days ago, in which I explained all the reasons for which, after this impulse and correction from here, we could expect this rejection higher, which is in fact exactly what the market did. Then we had the creation of this M pattern, explained again all the reasons for which there was the possibility of a rejection to the upside, completing the M pattern, the neckline, which again is exactly what the market just did. And by the way, I will link in the description those two previous analyses, so you can go and check them out for more free education. But at the moment, what do we have and what kind of structure the market has created. Now, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing. Now, if we look at the data precisely for the euro, the first thing that we have to keep in mind is that if we're looking at the data for the euro, actually, we are already looking at euro USD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been massively increased. We went from having minus 9.9k net positions all the way up to plus 41.4k net positions. So institutions have been moving aggressively back to the bullish side for Euro USD. So they went from having a negative net positioning, so more shorts than longs, with 177.2k shorts compared to only 167.2k longs, all the way up to now having the opposite, so more longs than shorts, with 182.5k longs compared to only 141k shorts. So keeping that in mind, that institutions are moving back to the bullish side, let's go back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. Well, here on the daily, we are actually currently testing a quite significant structured zone. This level was acting as previous resistance, so supply and resistance from which all this move to the downside was created. Again, here the market tested its zone and respected it as resistance. And until the market will remain below this level, it can easily be rejected to the downside. So only if the market will break above the zone, only at that point Euro USD would become interesting, because if we had a break above this resistance, this previous resistance would become support here. So in my opinion, if we get the break and retest, this is the level where we have high probability of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So if we get this break and retest, what would I expect in a situation like this? Well, first of all, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, if the market would shift from an intraday bearish to a bullish market after this break and retest, I definitely wouldn't be surprised to see a potential rejection to the upside away from this zone. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.